Good afternoon, everyone, and thanks for joining us as we go through another segment on the Paycheck Protection Program and focus on loan forgiveness. In today's discussion, we're diving into the do's and don'ts for using your PPP funds. It's going to help us outline the costs that are eligible for forgiveness, as well as spend some time talking about those that are commonly misunderstood, but not eligible for forgiveness, which you want to stay clear of. My name is Justin Elange. I'm a partner here at Aprio and lead our PPP loan assistance team. And I'll be joined by another one of our PPP loan experts, Tom Curran. Tom and I and our team and all of us really here at Aprio are in support and in collaboration with Fifth Third Bank to break down the Paycheck Protection Program through all of its twists and turns to ensure that we're providing up-to-date information, tips, advice, and ideas that help you in preparing for applying for loan forgiveness. Again, in today's segment, we're focusing particularly on the usage of your PPP funds, which means we're not really focused on things like full-time equivalents, salary hourly wage reductions, or other aspects of the Paycheck Protection Program. A couple of housekeeping items before we get started. First and foremost, if you can't stick around for the full hour, you want to come back to something that Tom or I say, or you simply want to review this with a CFO, a business partner, someone who's working with you on navigating the Paycheck Protection Program. We are recording today's webinar. A copy of that recording will be emailed to you, specifically to the email address that was used for registration, without any further action being taken on your part. Just give us a few days to process the recording and we'll have that distributed. But in addition to having that webinar sent to you via email, it's also going to be posted on what we refer to as the PPP Loan Preparation Toolkit, the Loan Resource Center. Many times we just call it the website. What we're referring to is 53.aprio.com. This is where we house all of our Paycheck Protection Program related content, not just our webinars. And that's where you'll find additional pieces of information that may dive into other areas of the program that we're not going to cover today. And we've broken down this content in various forms and by business type so that you can find the information relevant to you and digest it in a manner that suits you best, whether that's watching a video, browsing a checklist, reading FAQs, or looking at the application instructions in advance of logging in to apply for loan forgiveness. Again, all of that information can be found on 53.aprio.com and also where we will post a copy of the recording of today's webinar. If you take a look at our agenda here today, we're going to start off with what we call the PPP forgiveness overview, really focusing on a couple of key terms, time periods, things to keep in mind that you'll hear us reference throughout the course of today's discussion. The usage of PPP funds is generally broken down into two components, payroll costs and non-payroll costs. And we've done so accordingly with the outline for today's presentation. We're focusing first on payroll costs and those that are eligible for forgiveness. And then we'll spend a little bit of time discussing some of those payroll costs or things that are perceived as payroll costs that are not going to be eligible for forgiveness, so we know where to stay clear. We'll talk about the series of non-payroll costs, a list that has certainly expanded since 2020, and what each of them mean, and utilize some examples along the way. And then last but not least, we'll wrap up with some of the limitations. Unfortunately, we have those too, and how your spending habits need to be kept within certain parameters to continue to maximize forgiveness of your PPP loan. All that being said, Tom, it's great to have you here again today. We always like to set the stage here with this term, the covered period. We'll say it a number of times throughout today's presentation. So let's start off with defining it. Take it away, Tom.
Thanks, Justin. Great to be with everyone today. I'd like to mention, this cover period similar to what you talked about, covered costs changing. The cover period has changed as the PPP loan program has matured over the last, say, year and a half. So simply put, what is the cover period in today's terms that applies for all loans, whether it's a 2021 loan, round one or round two, or a 2020 loan? The cover period begins on the date of your loan disbursement. Okay, so you just basically simply look at your bank statement, see which day the funds came in. That's the day that your cover period starts. And then it ends at any time between 8 and 24 weeks from that date of loan disbursement. It needs to be at least 8, but it can be anything between 8 and 24, but no longer than 24 weeks. And you're probably saying to yourself, well, why would I have the option to choose? And the answer is really simple. It's all about customization. We're going to talk a lot today about documentation and how important documenting covered costs is. So if in your specific instance, you can get full loan forgiveness with 10 weeks worth of documents, you don't have to worry about that remaining 14 weeks to have to document and show Fifth Third or the SBA that you did spend all of your PPP loan proceeds in an appropriate manner. So it's really about flexibility and the ability to make this process easier for you as a borrower. The kind of final thing I'd like to mention, Justin, on this is there are probably some people have heard about the concept of an alternative payroll cover period. Well, that's no longer an option. It was removed with the Consolidated Appropriations Act in December of 2020. That was signed into law in January of 2021. So today begins on the date of your loan disbursement and ends anywhere between 8 and 24 weeks after.
Yeah, Tom, I'm glad you called attention to the flexibility that's provided. It goes without saying that one of the most frequent questions that we receive is what covered period should I use now that I have these choices? It is going to be dependent on the facts and circumstances of the business, the strategic approach that they're taking to loan forgiveness. Are they looking to leverage other types of tax credits or stimulus funds in conjunction with PPP? A variety of things that come into play. We'll touch on some of those throughout the course of discussion of just things to consider as you're evaluating what covered period duration may make the most sense for you. Now, the covered costs is another one of the areas that we've seen a change, and in particular in the non-payroll section. That's really where we've seen the change. Again, as I mentioned at the onset here with the agenda, it's broken down between payroll costs and non-payroll costs. Now, don't let the number of bullets deceive you. The lion's share of your PPP loan is focused on payroll costs. We'll talk about how much is required as we go throughout the course of discussion. We will break down payroll costs into two components: cash compensation and non-cash compensation, and we'll define each of those. And then later we'll come around and we will define the list of non-payroll costs, but we call attention to that now, noting it has been expanded. Or three, what I call, I guess, legacy PPP costs, those that have been with us since the beginning of the program: mortgage interest, rent, and utilities. But then in late December of 2020, they added 4 additional non-payroll costs: operations expenditures, property damage costs, supplier costs, and worker protection expenditures. So I think it's a good point or time to point out, as we think about these non-payroll costs, we take into consideration your comment about the 8 to 24 weeks when we look at the covered period, is what we're going to speak to today, unless we call specific attention to it, applies the same to your first draw PPP loan as it does your second, to a 2020 PPP loan as it does to a 2021 loan. These are changes that were made to the Paycheck Protection Program as a whole, applied retroactively, and therefore apply uniformly to all PPP loans. Again, we will point out where there are differences. There are a few of them. Again, we'll call attention as we move along throughout the course of discussion. Tom, our first one here, payroll costs and understanding what's included. Before I turn it over to you, I want to emphasize a really important word on this slide: employees. We're focusing on employees here first, separate from what we look at when we deal with owner compensation. That being said, Tom, Let's go through cash compensation first, starting with our employee payroll costs.
Absolutely, Justin. And another thing that I always like to point out on this slide as we go into cash compensation is this is really the only cost you need if you can get full loan forgiveness on cash and compensation to employees. Everything else, if you have enough payroll costs in terms of cash compensation, you don't have to worry about anything else we're going to say in this presentation today, regardless of how long the cover period is. So that might be something that you'd want to take into consideration when you're deciding on what type of cover period you want, is if I can get all the way to full loan forgiveness on cash compensation only, maybe that's the best route to go, and it eliminates my need for any other documentation. So what cash compensation is included in employee payroll costs? So basically defined as gross salary, wages, bonuses, commissions, tips, anything similar to that. Any payment for vacation, family, medical, sick leave, with a couple of exceptions that we'll talk about today. Allowance for dismissal or separation, so severance payments are included. And are there any limitations? Well, yeah, there are. There are some cap limits that have to be considered. And this is, once again, as Justin pointed out, this is for employees. Owners are treated differently, which we'll talk about. But for any employee, your cash compensation has to be limited to $100,000 over the prorated cover period. So what is that? Basically, you take $100,000, divide it by 52 weeks in the year, and then multiply it by the number of weeks in your cover period. So when you do the math, you can see that if you elect a 24-week cover period, the maximum cash compensation you can have for any employee is $46,154.
Yeah, Tom, that's certainly one of the areas where we see the, again, covered period election come into play. How significant that may or may not be obviously depends on the business, how much they're compensating their employees, things of that nature, but just one to keep in mind when selecting the appropriate covered period for the business. Cash compensation, as we think of and look at this slide and what comes into play, really falls in line with what we ordinarily think of when we think about payroll costs. It's when we get into this non-cash compensation aspect that really brings in more of that comprehensive benefits package, right? Because we're now diving into other details besides gross wages. When we look at non-cash compensation, again, still talking about for our employees specifically here, it's going to be the employer share of three components: group healthcare coverage, retirement benefits, and state and local taxes assessed on compensation. When we think about group healthcare, this definition has certainly changed 3 or 4 times. Group healthcare is health, dental, vision, life, and disability. Now, if you happen to have a self-insured plan as a business, that would also be included here. Again, health, dental, vision, life, and disability. It's also going to include the employer's portion of retirement benefits. Again, focusing on employer's portion, we're not taking into consideration any pre-tax or after-tax contributions made by employees. And then our last component, which actually probably drives more questions than it does provide answers, is it's the employer's portion of state and local taxes assessed on compensation. I actually think that the most important part of that is what it's not including, which is federal payroll taxes. The employer share of federal payroll taxes is not a cost that is eligible for forgiveness. Keeping in mind, the employee share is already included in their gross wages. A few little nuances that can come into play here as we think about retirement benefits and group healthcare benefits, likely more specifically, is that the SBA put out some guidelines that said payments that are accelerated from periods outside of the covered period, said more simplistically, prepayments, are not going to be eligible for forgiveness. What's come into play with that is looking at timing and achieving forgiveness and noting as long as the eligible cost was either paid or incurred during your covered period, that it would be eligible for forgiveness, give or take things like the cash compensation threshold Tom mentioned a moment ago. And what started happening was businesses would start prepaying their healthcare invoices for the remainder of the year. They know how much it is every month. They know it's not going away. The SBA caught on to that concept, put a little bit of a kibosh on it and said, no prepayments are going to be eligible here. We're going to think about retirement benefits and group healthcare benefits. Final item, as we take this one away, non-cash compensation is not subject to that $100,000 limitation Tom described a moment ago. So if you do have employees that are earning more than $100,000, that concept of divide by 52, multiply by the number of weeks in their covered period only applies to cash compensation. That you then in turn also get to include the employer share of these three components that you see here on the screen. Now, owner compensation is where things really differ depending on the business type. And what we mean by that is, how are you treated as an entity for income tax purposes? Tom, let's kind of run through this one. The most important of these is really what comes into play on the third bullet about where the individual's applicable compensation is. We'll talk about that in just a sec, but note that this information is going to be found on the website. Tom, walk us through this slide. We'll reiterate a couple of things. We'll guide back to some resources as well, as this one does get a little bit confusing because it differs by entity type.
Absolutely, Justin. And perfect time to point out the website 53.aprio.com right here as we go through owner compensation, so that you can go through and look by tax entity type, that some of the nuances that might be there depending on your company's specific legal entity type. But high level payroll costs, we talked about, they're calculated differently, and owner's compensation is limited to the lesser of the amount paid to the owner employees during the cover period, $20,833, which ends up being the 2.5 month equivalent of $100,000 a year, or 2.5 months worth the individual's applicable compensation in the year that was used to calculate the loan amount, which is most likely on a 2020 loan will be 2019. For a 2021 loan will be 2020. And really what they're getting at with that 2.5 months worth is they don't want to see someone that may have paid themselves, for simplicity of math, $5,000 in 2019, be able to take $20,000, $20,833 in forgiveness in the forgiveness process, regardless of the year. So really, it's meant to limit to what you did in the year before you ultimately ended up getting loan forgiveness. Also, really important to point out what the bar is for ownership in this situation. You can see at the bottom, for owners of C and S corps, anyone that has at least 5%. So in your own specific situation, if you have a fragmented shareholder base, you've got the potential to have a lot more individuals be treated as owners than you would typically think of as an owner when you're running the day-to-day operations of your business. Justin, is there anything you want to add on legal entity type and where potentially people could find that 2.5 months worth of the applicable compensation?
Yeah, a couple of things that we'll get into, and I'll say it slowly again. We'll guide you to some resources after this in just a moment. First and foremost, as we look at this first bullet, the amount paid, if you're a sole proprietor or an independent contractor, right, you're filing a Schedule C, you do not need to pay yourself. So I'll address that one now, that there is an exception that's provided there. No wiring from savings account to checking account or business account to personal account. That concept of having to pay yourself, if you are the owner, you're a Schedule C filer, you do not need to pay yourself to meet that first bullet. Now, where the challenges come in is a couple of areas here, Tom, as we look at the third bullet on the individual's applicable compensation. I'll walk through each of them, then guide you all to some resources that may be of assistance to you. Schedule C filers, right? Sole proprietors, independent contractors. You may go to one of two places, but they all start in the same. You're going to your personal income tax return, right? Your 1040, specifically your Schedule C. Businesses up until about March 8th of 2021 were required to use net profit found on line 31 of their Schedule C. To determine the individual's applicable compensation. That's how the loan amount was calculated. That's how the amount of forgiveness is also calculated for this particular purpose as we look at owner's compensation. On March 8th of 2021, and then moving forward, there was an option to use either gross income, also found on the Schedule C, or net profit, found on line 31. One of the two of those were used when calculating the amount of the PPP loan. Whichever one that was must also be utilized to calculate forgiveness. That cannot be changed from how it was calculated when applying for the loan to how it's calculated when applying for forgiveness. In all cases, we're going to our Schedule C within our personal income tax return, the 1040, to your Schedule C filers, sole proprietors, independent contractors. If we're a partnership, this is probably equally, if not more confusing. Just due to the math, the extra layers, the extra steps. We're going to a K1. We take that further, we're going to box 14A of the Schedule K1. We're subtracting out section 179 expenses and those found in box 12. If that was not enough, we've got to now multiply by 0.9235. That now gives us the individual's applicable compensation for partners in a partnership. LLCs, taxes, partnerships certainly fall into that category as well. Save the easiest one for last year, Tom's. Our owners of C and S corporations. We're looking the same place we go to for our W-2s. That is, or for our employees, we're going to the W-2. It's important to know we're not talking about dividends or any other distributions when we come into this. These are gross wages and compensation reported on the W-2. They're coming into play for our C and S corporations. I know that can be a lot. One of the reasons and why the content broken down on 53.aprio.com is done so by business type, how you file for tax purposes. Great information located in the FAQs in particular, as you think about understanding the owner compensation and associated calculations. And that's certainly where I'd be going to take a look and rehash that information. In some owner non-cash compensation, another area which is important to pay attention for business type. This too can be found in the FAQ documents or other references on 53.aprio.com. As we look at owner non-cash compensation, there are some further limitations than what we saw previously with our employees. Starting with healthcare costs, right? We talked about that: health, dental, vision, life, disability. That can only be included in a request for forgiveness for C corporations when we're looking at owners. Again, that's 5% or more ownership stake if you're a C corporation. For all other business types, healthcare costs are not forgivable for any owners of the business. Retirement plan expenditures, more complicated, a little bit expanded. Both C and S corporations can give some consideration, thereby knocking out any sole proprietors, independent contractors, or entities taxed as partnerships. A little bit of additional calculations that come into play. We don't just get to take the amount necessarily that was paid during the covered period, but it's worth noting that there's a limitation that has to be monitored. It's capped at 2.5 months worth of the corresponding expenditure in the year that was used to calculate the loan amount. For most entities, that year was 2019, but certainly that was an option provided for those applying for 2021 PPP loans. Again, whatever goes into your calculation to determine your loan amount is what is being used to analyze the forgiveness aspect. That holds true here as well. Now, Tom, we talked a lot there about what is included in payroll costs, what is forgivable, all important, but it is extremely important to know what is not forgivable at the same time. And some of these kind of bring into perspective a little bit of strategy that your business may be able to consider to maximize some additional benefits beyond just the Paycheck Protection Program. Talk us through the different aspects that come into play here. It's the first one you touched on briefly, but we'll remind everyone about that one and talk about some others.
Yeah, absolutely, Justin. And this is just as important. as what goes in. What can be included is to make sure that you've done the proper work on excluding what can't be used. So in terms of payroll costs, as we talked about, any cash compensation that's in excess of $100,000 cannot be used for PPP loan forgiveness. The second piece is compensation to any employee whose principal place of residence is outside the United States. So it's only available to people that live in the United States. The third is payments to independent contractors. As Justin talked about on the previous slide, anyone that was an independent contractor has the ability to get their own PPP loan. So that way you can't use it for your own loan forgiveness if you employed any independent contractors. Any payments made for qualified sick or family leave wages, which were allowed underneath the Families First Coronavirus Response Act, mouthful there, commonly referred to as an FFCRA credit. So anything that you use to get an FFCRA credit, you must exclude from payroll costs. And then the third, which I'll go into deeper detail on the next slide, is qualified wages taken into account for the employee retention credit. Now, it's important to point out, the last three on this slide as to why. Why can't I use any of these expenses? Well, it's double dipping. The SBA and the IRS wanted to make sure that when you were applying for retention credits, Coronavirus Response Act credits, that you were only using those wages for one program or the other, not both programs.
This last one, Tom, is what we're seeing, hearing a lot about. We're living and breathing this on a day-to-day basis, this employee retention credit. We'll talk briefly about what this is, just to put it on the radar. If it's not something you've explored, we certainly encourage you to do so. What we're going to see, and we're just going to look at this at a very high level here. There's obviously a lot of information associated with the program, but I'll boil it down to the couple things that should pique your interest. It's a refundable payroll tax credit. All right, a couple of important words. Refundable, yes, the IRS will send you a refund. And two, it's a payroll tax credit, right? It's not based on your income taxes or your income tax position, also meaning that not-for-profit or other tax-exempt organizations are eligible to claim the employee retention credit. From the inception of the program through its latest availability, being March 13th of 2020 through December 31st of 2021, the credit can be worth up to $33,000 per employee. So of course, there's some calculations and some math, as well as some eligibility criteria that can come into play. This is based on effectively subsidizing a business for retaining employees or maintaining workforce, despite having significant declines in their revenues, or having to make more than nominal changes to operations as a result of having to comply with various government orders, placing difficulties on a business, still finding ways to work through that, finding ways to maintain your workforce comes into play. As Tom mentioned a moment ago, and the costs that are not eligible for forgiveness, he referenced the employee retention credit. That's why we're talking about it here. There are certainly some strategies that can be implemented by a business to figure out how to maximize both programs. The employee retention credit was not made available to recipients of PPP through all of 2020. And then with the signing of that stimulus bill at the end of the calendar year, they opened it up to recipients of PPP and retroactively. We can go back and claim this retroactively as a business if we qualify. We simply cannot use the same wages, which is a driver of this retention credit, a driver of Paycheck Protection Program forgiveness. We can't use the same wages for both programs, but we can certainly build a strategy around whose wages we apply to which program, from one paycheck to the next paycheck, overlapping time periods, overlapping personnel. Just not the same exact dollar can go to both programs. This may drive discussion on your covered period. It may drive strategy on your Paycheck Protection Program approach to forgiveness. but it's something that is at least worth a look to see if this applies to you, to determine if there's other funding that may be available to your business. There is some information on 53@aprio.com related to the employee retention credit, which you'll find on the other COVID relief programs section of the website. Now, Tom, as we kind of shift gears here from payroll costs and into non-payroll costs, there's something that's certainly worth mentioning, and ERC is a particular item that may bring further reason to look at non-payroll costs. The payroll costs that we just described, cash compensation, non-cash compensation, employees, owners, what have you, are to be reported on a loan forgiveness application if they were paid or incurred for all individuals employed during your covered period. What we're going to see with our non-payroll costs, again, there are 7 of them, is that they're only required to be reported and documented if you're requesting forgiveness on those amounts. So you can certainly get to full forgiveness with just payroll. Of course, that depends on the fact and circumstance of the entity, but ERC is certainly one of those areas where we're certainly seeing businesses pull in non-payroll costs to preserve wages to maximize value and benefits from other programs. Other instances may simply be needing to spend all the PPP funds in the allotted time period. There's a lot of reasons they come into play, but it's worth noting non-payroll costs, as we work our way through the section, is only required to be reported and documented if you're using these amounts to request forgiveness. Tom, our first one's utilities. You want to talk through what's included and what does transportation actually mean?
Yeah, absolutely, Justin. I'm glad you put out the point on transportation as a mental reminder here that it's not going to be what normally people think. But as you're looking at it, utilities, what can you include in your utility bucket for loan forgiveness? First couple are pretty simple: electric bills, gas bills, water bills, phone, internet, and then we get into transportation. When you take a look at transportation, it's not fuel, it's not repairs to vehicles. It's really meant for interstate tolling. So any type of toll programs that you would have had to pay money in to operate your fleet, those tolls can be included as a utility bill. So kind of a weird wording on it, but that's what it ultimately ends up being for transportation. Yeah, on to rent. So what can you include in the rent bucket as we go through these initial kind of our old school buckets of covered costs? So rent, business rent or lease payments that were made pursuant to a lease on real or business use personal property that was executed before February 15th, 2020 can be included. And I think it's really important to look at that real or business use personal property. So it's anything from your normal brick and mortar rent to a copy machine rent. It can all apply as long as the lease was in place before February 15th of 2020. Now, there is a bit of a carve out on that I'd like to talk through as well in terms of rent, is that if you had a lease that existed prior to February 15th, 2020, that expired after February 15th, 2020, and you renewed it, those renewed lease payments are eligible as a cover period expense for forgiveness. So if you had a lease that expired and you didn't renew it, and you entered into a new lease for another product, those would be excluded. But anything that you subsequently renew can be included for loan forgiveness. There's a lot of confusion on that sometimes, Justin.
Thanks, Tom. We got one more of the legacy costs. Tom, you want to take us through that one as well? That's interest.
Yeah, absolutely. And interest, just like rent, you're gonna see here that there is some language that's very similar. So payments of interest, and it's interest, so you have to take a look at it. It's not any prepayments, and it's not any principal payments. It's interest only that's on business mortgage obligations on real or personal property that was incurred before February 15th, 2020 is eligible for loan forgiveness. Similar to rent, if you had a mortgage that expired after February 15th, 2020 and was subsequently refinanced, those interest payments are also eligible for loan forgiveness. So once again, refinance debt works, new debt doesn't work. There was new debt taken after February 15th, 2020, not included for loan forgiveness, but if it's a refinance, it can be. Also important to point out that non-mortgage interest is a permissible expenditure with PPP funds, but it's not eligible for forgiveness. And really what you think about there is maybe any interest that you paid on a credit card. That interest would not be eligible for PPP loan forgiveness.
Thanks, Tom. Now let's take a look at we'll call them the newer costs, although it's been about 9 months here, but reminding everyone that these costs are applicable to 2020 PPP loans as well. They can be utilized. The first of which is covered operations expenditures, and certainly it's a broad term. Even the definitions of it are relatively broad as well. What this refers to is payments for a business software, cloud computing service that facilitate operations. It can mean a lot of different things to a lot of different businesses, depending on the type of industry that a business may operate in, whether that's a product or service delivery. It can be accounting system, it can be HR systems, payment processing systems, inventory tracking, shipments, you name it. Business software or cloud computing service. Not really referring to professional services, but more software-based sauce, whether that's on a computer or in the cloud, that facilitate the operations of the entity. This cost can be included here in covered operations expenditures. This one is kind of going the other way, Tom. Covered property damage. This one's much more specific than covered operations expenditures. So specific that we're going all the way down to uncovered, uninsured, unreimbursed costs for property damage that was a result of the public disturbances that occurred in 2020. Very narrowly focused, whether that was vandalism, looting, or other property damage. It is associated specifically with the public disturbances that took place during 2020, called middle late summer, that were not covered by insurance or other types of compensation. Covered supplier costs. This one can be really important depending on the industry and the business to which they operate in. Key thing here is going to be time frames. It's really important as we think about the utilization of covered supplier costs. Covered supplier costs. First criteria needs to meet, right? We're buying goods that are essential to the operations of the borrower at the time in which the expenditure was made. And when I ordered it, when I pay for it. It's essential to the operations of the borrower at that time when the payment is made. Second part of that criteria is that the associated order, contract, purchase order related to those goods was in effect before your cover period, before you received your PPP loan. Place the order, received PPP funds, then made payment. It has to follow that order to be included in covered supplier costs, with one exception. If the goods that we're referring to are perishable goods. Perishable goods, the difference that comes into play is the timing factor. We're not only looking for purchases that were made or orders or contracts from before the covered period, but anytime during the covered period is applied just the same. So effectively, any expenditure for goods that are essential to the operations of the business if they're perishable goods, are going to be eligible for forgiveness if they're paid for during the covered period of the entity. Restaurant, really good example to think of here when I think about perishable goods. Tommy, I'm going to take this last one, covered worker protection expenditures. We've all seen these
Yeah.
in places of business, out on the weekends, in the evenings. Let's talk through this one here, worker protection expenditures.
Yeah, absolutely, Justin. Something that unfortunately impacted pretty much every industry I can think of through 2020 and here now a significant portion of 2021. So what is a worker protection expenditure? This is another one that's pretty broad in terms of what can be covered under it. It's really anything that's an operating or capital expenditure for the accountants in the room. And we needed to make sure that definition was segmented out. So it's either operating or CapEx that helps a business comply with guidance, helps an entity comply with requirements established by guidance for worker protection. So a lot to unwrap there. The example that I always think about is, when we went to a big box retail store or a supermarket, when they put the plexiglass screen between you and the cashier. That would be a covered worker protection expenditure because they were trying to make sure that there was no transmittal of COVID through that barrier. So it's, purchase, maintenance, renovation things. We saw in a lot of restaurants, drive-through expansions, expanding outdoor dining capabilities into a parking lot in many cases. Anything that you had to do in terms of health screening. All of those could be considered a worker protection expenditure because you were really doing it to protect your employees. Anything that you purchased from, face masks, respirators, any sort of HVAC enhancements that you potentially may have made to try to purify air more. They all are covered. It really is important also to note that this doesn't include any residential or real property or intangible property. So it had to be commercial property that was ultimately enhanced for worker safety.
Thanks, Tom. And that brings us to our limitations on non-payroll costs. As we look at this, some of us may see more than another based on the situation. And I think that we'll use some examples that can come into play, but really what I want to drive home before we even go into this is that this, as you hear me speak to it, can get complicated from a documentation standpoint and may be a reason to stay clear of these costs unless you need them, right? If you need to get them to get the forgiveness, we deal with the complications. I'll explain what they are. I'll explain what comes into play, but where we have the opportunity to keep things simple, we certainly want to do so. Limitations on non-payroll costs. Let's start with kind of the first half of the first bullet. Has to do with costs attributable to operations of a tenant or a subtenant, right? In this scenario, let's assume I'm the PPP borrower. I've got a lease on an office building. I've got 2 floors, and somewhere along the way, after obviously we're going post-COVID, my company has the ability to work remotely, and everyone wants to. So we've got a lot of empty space. And Tom has started a new company, and it's getting together in person, and the collaboration is extremely important. And he's looking for office space, and so we enter into an arrangement where Tom is going to occupy the first floor of that building. I will no longer be able to utilize the rent costs for both floors because I'm not occupying both of those. Tom is now conducting his operations out of one of those floors. So I have to reduce the amount of the rent from the amount of the lease to determine how much I can claim on my forgiveness request. I use rent there as the example, but that would apply the same for all non-payroll costs. As you think about home-based businesses and household expenses, really what comes into play there is understanding that the costs that are going to apply for PPP are for business use. So if you've got a home office, if you've got other home-based businesses, think about utilization of utilities or mortgage interest, or some of these other non-payroll costs, making sure that you can adequately document what's for business use and what's for personal use. Think about that similar in how one does an income tax return. Same idea would apply there. Now, this last one is specific to related party rent. Related party rent, and what comes into play here is not the exclusion of rent paid to a related party in a forgiveness request, but a limitation. The lessee, right, we're assuming that's who the PPP borrower is, pays rent to a related party. They can continue to utilize that rent on a forgiveness request to the extent that the owner of the property has and pays mortgage interest associated with a debt instrument on that same property. That's your limit. You cannot exceed the amount of mortgage interest on the property that the property owner is paying when we're dealing with a related party rent situation. Unfortunately, what that may mean, and we've certainly run into this quite a bit, the related party may not have a mortgage on the property. They may own it outright. It may have been set up that way intentionally and structured that way legally, intentionally. Unfortunately, what that does mean is the rent payments made to that related party would not be eligible for forgiveness because we'd be limited to the interest amount, which would be zero. Again, from a documentation standpoint, this can get a little more complicated. May be wise to stay clear of this if possible, but something to consider based on the facts and circumstances of your entity. So Tom, I said something earlier about not using non-payroll costs, or you don't have to use non-payroll costs. Let's talk a little bit about what that means and the appropriate allocation between payroll and non-payroll to avoid jeopardizing any amount of forgiveness.
Absolutely, Justin. It's what we refer to commonly as the 60-40 rule. A minimum of 60% of your covered loan amount must be payroll cost related. 60% is payroll costs, and then the 40% can be used in the non-payroll costs that we've outlined over the last about 15 minutes of this presentation. Really simple to calculate. Take your total eligible payroll costs divided by 0.6. If total eligible payroll costs divided by 0.6 is less than total expenditures on payroll and non-payroll costs during the cover period, you may need to make an adjustment. So guys, in timing of PPP loan forgiveness, what are you looking at in terms of how long this overall process takes? Well, the first bullet point is simple. You can submit for loan forgiveness at any time on or before the maturity date of the loan, and it can including even before the end of the cover period. So you can, if you have a 2020 loan and you haven't started your process yet, and you're starting to have to make payments on the loan, it doesn't mean that your loan is not still fully forgivable if you have the applicable expenses that we talked about. You can apply all the way right up until the maturity date of the loan. So in terms of timing on what it takes to get this through lender and the SBA. So what you'll end up doing, and you'll see the word complete is bold. It's a very important part of this. Your lender, in this case, Fifth Third, has 60 days from the receipt of a complete application to issue a decision regarding forgiveness of the SBA. So anytime that you have your application kicked back to you for edits, it's technically incomplete, and that 60-day window begins again. So we always advise people to try to do it right the first time so that you don't have that 60-day window continuously starting to be refreshed every time that there's a discrepancy that's found. So at that point, you get through your 60 days, lender, Fifth Third, has issued their opinion to the SBA. The SBA will then remit the appropriate forgiveness amounts to the lender, plus any accrued interest to the date of payment, not later than 90 days after the lender issues its decision. So 60 days for bank, 90 days for the SBA to remit the funds. So the whole process from a complete application takes about 150 days.
Yeah, Tom, even though that these are set as effectively maximums, we're certainly seeing them happening in a faster period. Certainly since like really about 3 months ago, since June 15th of 2021, we've seen a faster processing time. The SBA made certainly a concentrated effort here to expedite the forgiveness process, make it less confusing, as we've seen through the release of various different applications to simplify that process. um, you know, be prepared when applying for forgiveness. Understand your documentation requirements that come into play, noting that everybody, all loans, all sizes have documentation requirements. It's a matter of what has to be submitted and what has to be maintained. Right, we've got subsequent audit periods of between 3 and 6 years after the loans are forgiven or repaid. Not just when I submit a forgiveness application, not everything's just done. Not when forgiveness is granted, doesn't mean everything is done. So understand your documentation requirements so that you build your files appropriately. Should something ever come up, I'm not implying it will, but should something come up, you want to be prepared. To understand the documentation requirements, because they do vary by which application is utilized and what costs are reported. Take a look at 53.aprio.com. If you go over to the forgiveness page, you work your way down to the bottom half of that screen. There's a kind of a best practices, I think, for applying or preparing to apply for loan forgiveness. You'll see a document on identifying the right loan forgiveness application. And then you'll see checklists for each of the 3 applications that are out there that outline what to provide some definitions. It outlines the documents that you're required to submit to Fifth Third when you apply for forgiveness, as well as the documents that you must maintain. Tom, all that being said, any kind of final parting words here?
Yeah, Justin, I just hit home once again. Documentation. It's so important to have all of this documented. If you're to use it for loan forgiveness, please take the time to document it accordingly up front. It's going to save you a lot of headaches in the back end in terms of submission with ultimately the SBA. So just please, all I can say through the I don't know, the hundreds of these that we've worked on, the documentation is definitely the name of the game and the most important thing.
With all of that being said, we certainly appreciate your time today. Hope that this answered quite a few of your questions or gave you some ideas on how to use your PPP funds. On behalf of Fifth Third Bank, Tom, myself, and all of us here at Aprio, again, we appreciate your time this afternoon. We encourage you to utilize the resources on the website, 53.aprio.com, as you work your way through navigating the loan forgiveness process. Thanks again for tuning in. Have a great rest of your day and hope to see you again soon.